Julia, I was under the impression from everything I'd read that the global shipping industry was having a tough time. You wrote that note on the Chinese shippers. They certainly are. But we had good results today from the shipping bit of Maersk. What's going on?
Yeah, well, they certainly are still having tough times, but I think it's more that the shippers have now just adjusted to that. So Maersk did very well today. They completely blew expectations out of the water in terms of their results. And their profits are up quite a bit, specifically within their shipping division. And that was all totally really down to cost cutting. So while revenues weren't even up that much, they managed to boost their EBITDA by 30%. And that was all thanks to cost cutting. And I wasn't the only one. It seems quite a lot of analysts were also quite negative and got a bit of a shock. What exactly are the liners doing, or Maersk doing, on the cost cutting side? Well, fuel's the big cost for them. So they're looking at routes, trying to shorten some routes, trying to take some unprofitable shipping lines off, so those Asia-European routes which have sort of got a lot of overcapacity, they've been taking lines off there, and also just looking at their costs that they pay, so charges to go through the canals, and also port costs. They've been shaving back on those as well. That's one of the other ball points, I guess, when share prices were heading south, is that there'd be some consolidation in the industry to reduce capacity. What's going on there? Yeah, well, there was supposed to be consolidation, and it was sort of hoped for, but the Hapag-Lloyd consolidation merger didn't actually go through in the end. So that hasn't come through, but there are alliances instead. So Maersk is looking to sort of run this line with one of the French shippers, and that's probably going to go through next year. Right. And Maersk's beating expectation caused the share price to leap almost 8% today. How's the valuation looking now for the company? Yeah, so the valuation's gone up, obviously, as a result of this. It's now trading on 13 times forward earnings. It's not quite at its peak that it's been at over the last 3 years, and given that these cost cuts now look very real, then perhaps that's even got a little bit further to go. Well, if only all CEOs could drive their businesses just slower to improve profitability, they'd enjoy that. Thank you very much for that update on shipping.